Welcome back to the late day wrap up, of which I've just gotten done with my times with a blizzard, and it was actually quite a disastrous situation. So on to the analysis we go. Of course, going to be doing a bit of a lightning round on all of the major pairs, major indices and whatnot. Talk about Bitcoin a bit as well, and maybe even address the Tether situation, of which there is plenty to say about that. Might even save it for tomorrow's video because it might be a bit too long. So with that said, would like to wish you the best, and let's dive into it right now. Start off with good old Dixie, and what do we see? Still the same range that we've been looking at for the past almost and a half months now, between about 91 to the upside and about 89 3/4 to the downside. Short term, medium term, I am looking for a little bit more of this one to fill out the downside, as we did say was likely earlier. I think it was this Monday. Later last week. Yeah, I have to think like 3 days ago, but that would be Friday. Anyways, with that said, yes, short term, a little bit of downside here. However, I would not be calling a major breakdown on this one, and I do still look at this as a potential macro basing region as long as 89 3/4 is not broken to the downside. So with that said, short term, yes, is down, but don't mistake that, at least for now, with an actual breakdown continuation phase to the downside. Obviously, if Dixie does break down, that actually would help out all major markets as well. They are kind of, if you've seen, a little bit red in the current moment. So with that said, I'm still looking for a range to kind of extrapolate from here. We typically do see these macro lows taking about 3 months long. You can see this macro low in 2018 about 3 months. You can see this one over here in 2011 about 3 months. You can see this macro low over here in 2008 for about 3 months as well. We do see going all the way back to our last macro low before that, about 95, and of course the year 1990 as well. So all of those do kind of play within that same sort of time frame for putting in those major lows. And as you can see right here, we've been in this range for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So about 2.5 months now. So I do think that it has a little more time to kind of bake within this range, and then very likely, at least in my opinion as it is right now, I would still be looking for this one to probably bounce or at least try again to the upside. Of course, though, at the end of the day, my opinion is not in any way, shape, or form relevant to the actual trading style of this. If it breaks the upside, I'm looking for a move to about 92.5. If it breaks to the downside, I'm looking for a retest of our wick lows and 2018. So that'd be all the way down below 89 bucks even. So quite the moves there, and still, more or less just sideways on the higher term timeframes. With that in mind, let's go over and check out traditional markets, of which we see NASDAQ playing out a significant downside move. I believe I did say on this morning's video, I would have been looking for a short-term move to the upside, a short-term bounce to the upside, plus continuation to the downside, of which looks like we didn't really get much of a bounce to the upside. Pretty damn stifled there, right around 13,350-ish region, and then gunning for, I believe, our daily levels right around here, actually stabbing down all the way down to the daily 89 exponential average. Now, I would be looking for this level to bounce it up a little bit more, and coming into tomorrow, what I want to be aware of, I'd actually go down to an hourly for this one. Yeah, I'd actually be looking for this one to probably bounce back up towards about 13.2-ish region. Around 13.2-ish region. Again, that is irrelevant whether I'm bullish or bearish on this one on the higher term timeframes, to be deliberately clear here, because on the higher term timeframes we do have a bit of a bigger reversal in place. Obviously, we do have what would be considered a head and shoulders if this one does essentially just fail to get back above the 13,500-ish level. So it is pressure on. So essentially, the case that I'm sort of constructing here is that, yeah, short term, medium term probably does balance it. The question is, how high does the bounce get? If it fails to get back above 13,500, I do look at this as more or less distribution and probably setting up for a drive lower over time based off the weekly here. But of course, that will take time just by the nature of it. So again, short term, medium term, a little bit of bounce to the upside. However, higher term timeframes are really showing some pretty nasty signals right here. Obviously, do want to keep in mind that the monthly will be closing not today, not tomorrow, but at the end of this week. We actually will see the end of the trading month on Friday. Obviously, the month ends, I believe, on Sunday or Monday, but that will be the last trading day on Friday. So keep in mind how this one actually looks. If it does close anything like this would be what is called a shooting star dildo, and that could be interpreted as a sign of indecision and perhaps even reversal. It would be confirmed as reversal if we do come back down, and especially start to close the next month below this low. But even just coming back down and taking out the low of this current month, which is for reference 12,727.25, then that would be typically good enough, and we can target a move back down to the 10 simple wherever that lands on the open of March. So I'd imagine that'd be somewhere around low $12,000, and that would look pretty fucking nasty, to be fair. That would look very fucking nasty. But for right now, I would still give it a chance, just because it's not really wise to call a top on a generational rally, at least in my experience. So with that in mind, we'll go check out SPY futures as well, which don't look as dire, to be fair, as here too. So that's why I do hesitate to like just blindly call this one a major high. I do think that it's a pretty damn big high. However, you know, calling it on, you know, on a monthly, which would represent the macro in this case, I think is not. It's just not warranted yet. It could be as soon as March, but not exactly for right now. Anyways, as we see on SPY, move down to the 10 simple. But what does it look like on a daily? Down to the 55 right here as well. A little bit of a head and shoulders in the top. That one has already played out its measure move. I'd imagine if I can just visualize this one, you can pretty much just see it yourself. On the highs right there, let's actually see. Did it play out that move? I think it actually would have. Yeah. Oh, looks like I already have it in right there. Yeah. So it did play out that move. I guess that was targeted from Monday's video. Now the question is, you know, probably does bounce here, but how high does it get on the bounce? If it fails to get back above about 13, or sorry, not 13, but 3,900-ish region, I would be looking for this one to, well, to kind of do the same thing that we just spoke about on NASDAQ and play out a long-term downside move. Target regions would be down to about 3,700-ish. However, I would still give it a chance. And of course, on the monthly here too, we do have not as dire of a situation as what we see on NASDAQ. So I would put a bit of significance on SPY, but still with about 3 days left in the trading month to go, a lot can happen. That is an eternity at the end of the day. So I do think that it's potential. It's something to be aware of, but it's not actionable in and of itself just yet. And as SPY looks, and as far as SPY looks, it's not actionable at all. In fact, I mean, it still look like continuation. If SPY closes anything like this at the end of the month, I'd probably be looking still, or I'd still be bullish long term. Does that mean that we make new highs in March? Maybe, maybe not. But over time, yes, I would be looking for new highs. And with this right here, I mean, it still actually looks pretty damn good, to be fair. Momentum oscillators are actually quite bullish here. In fact, looking at monthly RSI, I'm not bear. No, I'm actually very glad that I looked at this. I'm not bearish on this at all. This is actually a very strong read right there. No, I think that this is actually probably going to get reaccumulated. Probably plays out a sideways range here for a while, but ultimately, I'm not bearish off that, especially off that monthly. Lower time frames than that though, probably a bit of sideways, maybe a little bit of downside as well, but long term, I don't think so. Anyways, moving on to gold, what do we see right here? Kind of the same thing, looking like it's trying to put in a lower high, weekly, you know, technically speaking, as we've been saying for like the last month and a half now, it's like I should be, or I guess maybe like a month, yeah, going back to here, I should be bearish on this. Personally speaking, I wouldn't have taken the trade because, well, because I don't listen to my own fucking analysis, apparently. No, well, first off, I just don't trade gold, more importantly. But looking at this right here, the weekly, as long as it's below the 21 and that has a negative slope, I look at this as more or less trending down. We do see that we have a slew of lower highs. We also do have a slew of lower lows as well. And this one will have continuation confirmed below the 55, which is 1780-ish region. That will start to target moves back down towards south of 1700, somewhere between about 1680 and 1690. Again, you know, it's one of those ticking time bombs, it feels like. However, I would say this. There is one thing that would make me obviously very bullish on this one, and that'd be closing back above the 21 pivot, which would be about 1850. Also just kind of getting back above this this distributive short-term high right here as well. One of those two things happening, good enough for me, and I would be bullish on this one once again, targeting moves back to 1950 and beyond. But until that happens, as I've been saying for the last like week and a half now to 2 weeks, I technically speaking, I should just be bearish based off that. So take it as you will. Very interesting to see it like not really play with anything in the markets right now. You know, while everything else kind of having these screaming moves, gold is kind of sideways. Maybe it is an actual hedge. It's a hedge for nothing. It's a hedge for doing nothing, maybe. Anyways, all jokes aside, let's go check out Bitcoin and let's address the tether situation really quickly here. The New York Attorney General, which has had an open litigation on Bitfinex and Tether, has finally, I guess, concluded their investigation, and they have come into it right here as I blind you with this with this really white page, which is actually difficult for me to read as well. But the way that I read this, it was a little bit alarming at first. With the way that this whole thing is worded, but when you read into the minutia, it actually becomes very clear that this is not all that crazy, to be honest with you, because they're getting fined $18.5 million. I'll say that again. They're getting fined $18.5 million. This is for a firm that was like talking about the other day. I think they were bragging that they made like $2 million in fees. So that's nothing for them. That's literally a slap on the wrist. Obviously, the Attorney General of New York knows this. To me, it seems like they're like they don't want to destroy the markets because obviously that's going to hurt more people, and the whole narrative of this is to protect investors, right? But But still, you know, something has been done here. So I'm curious to see how this one does get a little bit of play as time goes on. But if you recall, back in 2018, there was a big Tether debacle. It was right here in, I believe, October. It was right, it's best to see on Finex. Yeah, it's this right here. So you see the stray wick on Finex. Finex obviously very much in bed with Tether, as it's, you know, it's kind of like one and the same almost. And what we saw on this time was one of the initial sort of litigations, I think, being raised on Tether, or, you know, something big was coming out on Tether. I don't remember the actual specifics of it, to be honest with you, but something to do with Tether that was, you know, headline news and shit like that. And you saw on Finex, which doesn't seem like much now, but of course at the time of the day, this was a humongous move. We saw Bitcoin go from $6,000 all the way to almost $8,000, nearly a 25% move in the course of one singular day. Now that move obviously coughed up soon after that and spit out, and that's when we got a big nasty 50% downside move from 6,000 to 3,000, just a phenomenal move in general. But what happened there is that when all of the questions and concerns were kind of raised with Tether, people who were skeptical of Tether or who wanted to get out of Tether, they could do so, but the most convenient way to get out of Tether is not to go back into US dollar, because that's the whole issue. It's like there's not many connections with that, especially in this landscape. But what you can do is you can go back into Bitcoin, and then you can go from Bitcoin to US dollar if you have serious concerns with the market. That is seemingly what happened over here. So I would say that with this sort of event going on, personally speaking, I want nothing to do with it. I actually just want to watch the market for a little bit, just like I did in 2018 as well, to see what the actual response is, because we are likely to have not seen it fully just yet. Now, again, rationalizing the resolution with what the New York Attorney General let Finex get off with, which was, again, basically a nothing. I mean, $18.5 million for them is nothing. It's fucking write-off probably anyway. So it means very little. To me, that is not as dire of a situation as like what, you know that guy on Twitter, Bitfinex, and I think it's like Trolley McFace or something like that. These guys have been raising issues with Tether for a long time. It doesn't really seem to have that same sort of severity with what happened here. I mean, $18.5 million is, I know it's, you know, it's certainly a lot of money, obviously, but for a company like that with the revenues that they have, it's nothing. So at least comparatively speaking. So, you know, I would be cognizant of something like this over here. However, market dynamics right now are completely different. You know, this was after about a year-long downtrend. This one over here, about a 6-month-long, just, I wouldn't even call this an uptrend. This is just a 6-month-long rocket ship to the fucking moon. 10,000 to 60,000 bucks, just insanity. Anyways, my point is that for myself personally, I'm going to be kind of staying out of the trading landscape for a little bit of time here, as this kind of does resolve itself. Now, to follow up on our morning's video, we did say what? Well, first off, I want to say that I addressed this by saying, first off, I don't think this is going to happen. What happens about a couple hours later? Oh, it definitely fucking happens. And we said what? If Bitcoin takes out the last 3-day low, which was right here, right around about 48,000 bucks on CME, then we'd be looking for a move back down to about 44 to 45,000 bucks, anywhere between there. And what do you know? Bitcoin did take out the low, and then we get that nice move down to about, actually, just below 45,000 bucks. In fact, 44,845 and 72 cents on Bitstamp. So not bad right there. So I would be looking for a bounce off that level, as we spoke about in this morning's video. First and foremost, that's what we're seeing right now. What happens next will shock you. No, what happens next is essentially this. Is essentially, I'd be looking for a range to be created on the short and medium term timeframes between the 21 and the 10 simple here, and I'd be looking for that to happen over the next day or so, and not really put too much on it. Now, of course, Bitcoin back above the 10 simple, not necessarily full on bullish, implying new all-time highs, just like Bitcoin back below the 21 exponential average does not imply new all-time lows. However, below the 21, not below the 21, below the $45,000 pivot right here, that's when things really do start to switch around for myself. Structure would be broken. We'd be looking at the volume profile. I mean, just, very easily to visualize right here, or you can just put on your trend lines as well. Same shit, basically. Like I said, I don't have it on this chart. Let's go to this one right here. There we go. There they are. Lovely. Anyways, if that level is broken, yes, I would be looking for a move down to the $39,000 level, which, by the way, is confluent with the 10 simple on the weekly right here. So I actually would look for that move to happen, but only if that condition is met. Until that condition is met, I do still run with the former assumption of this market. I know it sounds fucking crazy. I know it's I know it sounds a little bit far-fetched right now, but at the end of the day, I mean, we we technically still do not even have a daily reversal. We have a high, we do not have a low just yet. Your last high or low is pretty much right here. So that's where the narrative actually does start to flip around on a reversal. So, one thing before the next, we are dealing with big numbers once again here. And this is kind of like the terrifying, but also very inspiring thing about this market, in the sense that, we can have these huge moves and it doesn't really destroy the macro just yet. But below this level, yes, problems, back down about $6,000. However, as long as it holds, I essentially just look for a sideways range, and Bitcoin probably plays out this next segment, trying out a bit more of a bouncy bounce. I wouldn't be surprised to see Bitcoin test back up towards 51 or 52,000 bucks in the next day or two. And again, I'm not even going to have like a bullish continuation point for the upside, because I don't think it's appropriate just yet. I think we need to let some time just pass by. The most obvious thing would be, of course, though, a closure on new highs, but even then, I don't think that's really going to be happening in the next day or so. So with that said, sideways, likely seen as we just tested the bottom side of the range. I'd probably be looking for a test of the top side of the range. Presumably speaking, I'd probably be looking somewhere around 51,000 bucks. With that said, I do want to wish you the best and the happiest. I am going to go eat a ton of food. I'm wishing you well once again. Take care, and until next time.